Welcome, everyone. My name is Paul. I am the president of CandleCharts. Joining me here today is Steve Nissen, the CEO and founder of CandleCharts, where Steve will be performing and conducting his market outlook. Happy New Year to everybody. Glad that you are able to attend us live here, or those of you that are watching this via the recording. Steve is going to be going over multiple different markets here today, and he is going to be asking you a couple of questions. So we do hope and encourage you to participate when he asks you a question. Just a simple answer in that question tab, as we did a little warm-up right before the session began. So Steve's been doing market outlooks and obviously candle knowledge and training for decades. And we hope that you get something out of this. And I will also be coming back in a little bit later telling you about a fantastic holiday promotion that you can take advantage of, giving you a little details. But that promotion is going to be happening very quickly, so we want you to take full advantage. So I know you're here to listen to Steve do a market outlook. Steve, I'm going to hand it over to you.
Great, thank you, Paul, and congratulations on attending, everybody. And we'll be going over some major markets and some markets in the news. Like today, there was Microsoft. So looking forward to working with you. And keep in mind, even if you don't trade or watch any of these markets, everything I'll be going over, you can apply to any market in any time frame, even overseas. We do have clients from 85 countries, so these are universally applicable. And we'll start with our general disclosure, just reminding you that there's a risk of loss of trading pretty much in any market in any time frame. And if you want more specific details about the disclosure, you can go to this link. So with that, let me get up my trading platform and share it. Let's see, let's hope this works. Okay, not sure why it's not. Oh. Yeah, sorry about that. Oh, okay, I got it. I think I got it. Let's see. Yeah, it's a new computer, so. Very weird. All right, so I can show PowerPoint. I'm trying to show. All right, I'm just going to do something different. Sorry about that. There we go. All right, just a little hiccup. Sorry about that. So anyway, let me start with the S&P. Actually, I'll start with the Dow. Okay, so the Dow, what you see here, for those who haven't been to any of my seminars or sessions, there's a 20-day moving average and there's a 50-day moving average. Simple moving average is 20 days blue, this is red, 50-day moving average. So with the Dow, essentially what this market is a box range. Okay, what the Japanese call lateral trading environment. Anybody recognize this candle signal? Long lower shadow, small wheel body, red or green at the bottom, at the top end of its trading range, coming after a downtrend. A hammer. Good call on that, Kevin. Yeah, hammer. It's called a hammer because it looks like the market's hammering on a base. And the low of the hammer usually is support. But what's interesting about this hammer's low confirms support from a few sessions ago. And so essentially, what's been happening is this is in a box range. I really like box ranges because what you could do if once the market breaks out of the box range, it's kind of like, I make the analogy like a coiled spring. And once it breaks out, you could use the height of the box range, in this case about 1,000, if I'm doing the math right, and add that to the breakout, either if it breaks out to the upside or to the downside. And keep in mind, again, for those who are not familiar with one of my favorite strategies, change of polarity. What should happen is an old resistance area should become new support. So if the market does break out, this old resistance should become a support. And on the flip side, prior support, see the support over here? As long as it's tested twice, 1, 2 times, once it's broken, look how it became resistant. So one of my favorite easy strategies to use, change of polarity. So right now, short-term trend is neutral with the top end of the box range as our resistance. If the market closes above it, then we'll be looking at the multi-tested highs right over here. But over the last week or two, very tight range. Next, we'll look at the NASDAQ. Okay, here again, we could see the 20-day is under the 50-day moving average. And the short-term trend I'm going to have is neutral, maybe a little higher. Okay, by the way, anybody recognize this? The green candle. Let me see if I can make a box. We'll try to make a rectangle. If not, I'll just mentally. Okay, anybody recognize that candle signal? A bullish engulfing pattern, right? Kevin got it again. And what was particularly potent about this bullish engulfing pattern? There's actually two things about it. One, look at the size of the green wheel body. And the second aspect is actually related to the first, and it's wrapping around the prior 2, maybe even 3 wheel bodies. So keep in mind that even something as potent as this doesn't predict how far the market's going to move, but it normally is a strong signal that the bulls, remember there's a green wheel body, the market opened here and closed here, the bulls are really grabbing control from the bears. Actually, what was happening here to the bearish momentum as the market was selling off, and how can you tell about what was happening to the bearish force? Once again, the idea is even if you're not trading the composite, we want to make this educational to see how to apply it to your own strategies. And I think I'm going to have Kevin teach the rest of this class here. Yeah, Kevin says the real bodies are getting smaller and smaller. So open here, close here. They're all red real bodies, right? But look at the diminishing size of the red real bodies, and then boom, the bulls have taken over. And there's a really nice chart just to show you, you know, how the candles can give insights into the force of the bears, in this case diminishing, and the bulls, in this case taking resting control of the market. Candles are really simple to construct, same as a bar chart, open, high, low, and close, but you get so much more volume information looking at the candles in a bar chart. So, just for example here, what do we have here? Obviously the doji. Who's in charge here with this long green wheel body? The bulls, right? Who's in charge here? Nobody. It's an equilibrium between the bulls and the bears. And one of the aspects I like looking at, if a candle signal confirms something else, I'd be more aggressive about taking that signal. This doji is confirming this high over here. So normally this doji turns the trend from up to a bit more neutral, but I get more nervous when it confirms resistance. And many candle signals can be used as support or resistance. So once we have the doji, take the high of the doji as potential resistance, and look at that. This stuff really works well when you have the correct education. I can't emphasize that strongly enough. I mean, Paul will be talking a little bit more about that. But there's a lot of information about candles on the internet. Unfortunately, most of it is wrong, or many people take candles out of context, not realizing that correctly, not only recognizing the candlestick signal, but how to trade with it makes a difference between profit and loss. For example, how I would trade this doji that wasn't confirming resistance would be very different than I'd be trading this doji that confirms resistance. It's not only the candles, but it's candles in context. So, okay, we'll come back to, we'll look at the S&P after the break. Let's look at crude. Okay, crude long-term trend is down. And interesting, I mentioned the doji, right? Doji has resistance. Here again, remember, you can apply this to any market at any time frame. I happen to be looking at daily charts. Look at this, doji doesn't turn the trend from market from up. It turns it from down. It turns it from up to neutral. But we use this doji as resistance, and almost to the penny, that is exactly where crude stalled today. Now, when we talk about bearish candlestick signals or potentially bearish or reversal candlestick signals, like, for example, a hammer or a bullish engulfing pattern, it doesn't mean, let's talk about bearish signals. It doesn't mean you always need to sell short. Bearish signals are good to know as a time to lock in profits. It's very hard to short in equities. It's a lot easier to do, obviously, in Forex. But for example, here it's a bearish engulfing pattern, red wrapping around the green. Now notice the bearish engulfing pattern doesn't have to wrap around the shadow. What it has to do is red real body wrap around green real body. So that's a bearish engulfing pattern. That doesn't mean necessarily a time to go short. However, it does mean a time to think about taking some profits if you're long. But I might actually consider going short here. Why? What is this bearish engulfing pattern confirming? And I'll give you a little hint. Resistance. One of my favorite Western indicators is just recent highs and recent lows. You may find particular Western indicators best in your markets. You're an expert in your individual markets. You may see nuances that others may not see. So you may find moving averages work really well as support or resistance. You may find, for example, a 20-day moving average works well in crude. I just like looking at prior highs and lows because everybody looks at those. So the fact that this bearish engulfing pattern confirmed resistance, one would lead me to be much more aggressive about lightening up on long positions, or maybe even exiting all long positions, or at a minimum, moving up protective stops. Okay, let's look at gold. Let's make sure I have, should have end of day data today, but I'm making sure. Okay, it's just updating, so. Give it a minute, and we are good. Okay, magic. So what I wanted to show is, because I know the market closed about resistance in gold. See the prior resistance area? Remember I had mentioned the change of polarity, old resistance becoming support? Look what happened today. Close above resistance a couple of days ago, almost to the penny in gold. It became a support area. And what's positive about gold, besides the long-term trend being up, is that look, market's in a bull channel. Higher highs and obviously higher lows. Okay, just ignore this. This is just a couple of minutes of trading. So short-term trend is up. And how do I find the next resistance area? We know what support is, right? The change of polarity. So the prior highs, today's low as for support. How would I get this is a daily chart. How do I get my next resistance area? What do I have to do? What would you do? Okay, Daphne got it. Yeah, go back as far as necessary. Good call on that, guys and ladies. You go back as far as necessary. So, a couple of ways to do that. You could do a daily chart. Okay. And very interestingly, looking at the daily chart, here's a bearish engulfing pattern. But notice this was also a resistance area. So this old resistance is really critical support. If it closes under it, it actually turns short-term trend negative. So I'm going to go to a weekly chart. Okay. So you can see this long-term resistance area. This is a weekly chart. So based on the week, obviously we haven't closed above this resistance because to get a candle, we need the open, high, low, and close, correct? So any close above the, say, 1840 area would be a break above weekly resistance. So as of now, we could easily see our next potential resistance. Look at this. For 4 consecutive weeks back in June, gold stalled at 1920. And most of you don't trade gold, but these are all strategies that you could all use with your own trading. So a little inverted head and shoulders here. Whatever you do in the Western technicals, you could do with candles. Okay, so let's look at the Nifty. Okay, for you. Now this is a daily chart of the Nifty. This is the Indian market. I know many of you trade that. And so with the daily, because of the gaps, I don't even look at the Nifty this way. I'll look at a weekly. So let's go to the weekly. Okay, so on the weekly, we have it has a shooting star here. And what was really interesting, this is one of the markets that we follow in our daily recap on mycandlecharts.com. And this was interesting. So here we can see this resistance. Now, if the market gets above resistance and can't hold above it, that's called falling off the roof. I came up with that name, falling off the roof, because it's like you give somebody a ladder on the roof and then take away the ladder. Anyway, it's a false breakout. And the strategy is with the falling off the roof, the target is the most recent low. And what's fascinating, it doesn't give you a timing on it. Look what happened in the Nifty. As soon as it gets back under here, it's a falling off the roof. And the target is here. We got there in a week. Normally it doesn't happen that way. So essentially, the Nifty is in pretty much a box range. The lower end of the box range is held here. Major support. 1, 2, 3, 4 weeks down here, right around 42.5. And resistance would be the high of the box range around here. Okay, but this is a Western strategy, a false breakout, falling off the roof, and you could apply it obviously to a candlestick chart. Okay, let's have some currencies, and then we'll look at I'm going to look at Amazon and Microsoft and Tesla and Apple and Bitcoin in a little bit. But let's look at some currencies, show you what's going on. And we're going to go back to a daily now. And I'm going to expand it a little bit. Just make it a little easier to see. And classic candles, use them correctly. Long-term trend is up. Short-term trend I'm having is down, maybe a little bit more neutral. But, okay, we don't have to ask what this is now, right? Bearish engulfing pattern, almost to the tip. The market stalled there. Not quite a bearish engulfing pattern here. When the red real body gets more than halfway into the green real body, that doesn't wrap around it. It's a dark cloud cover. So we can see where the critical resistance is. Okay, the short-term trend is a little more positive now. Let me show you why. Okay, so we obviously, or I say we, the market, the euro, obviously, the euro-US had support here. Look at this. The market closed under it. What should have been resistance once it closed under it? Right, the prior support, right? It got back above it. That's a positive. That's kind of the opposite of the falling off the roof, where the falling off the roof is bearish. The market cracks support and then gets back above it. That's called a crack and snap. And in theory, the target is the most recent high. So based on that, this high here is our target. It doesn't mean it's going to go right up to that. It could come back down again. But this is a key resistance area, and support potentially, whenever I talk about support or resistance, obviously it's potential support or resistance, is the most recent low here, okay, that we had a few days ago. And we'll do one more, and then I'm going to turn it over to Paul very quickly. Let me do one more currency. Do the pound dollar, that's a pretty popular one. And I'm going to do the same thing. I'm going to expand it. And then I'm going to look at Bitcoin and Ethereum and other cool stuff here. Okay, long-term trend is up. A little less positive because the 20-day is sloping down. But what do you have? Why do you think I have the short-term trend as a little positive now? The green wrapping around the red, correct? And why is this a little bit more important potentially? And confirming a support level, right? Another, green. There's not enough of a downtrend for me to say there's a bullish engulfing pattern, but it is a prior low. So the issue, however, in spite of the bullish engulfing pattern, think of this as a risk from the risk reward perspective. Let's imagine you're buying on the close, okay? Because it's a bullish engulfing pattern. Is that a good trade to go long? Look at that horizontal line above it. No, look at the risk reward. Okay, you're right near resistance. So if you're buying it here, and this is something we really focus on in our education, insights into risk reward, because a lot of traders get so excited they recognize the candle signal and they immediately buy and sell without understanding all the nuances. So if you're buying it here on the close, this is your risk from here to here, and look what your potential reward is. It doesn't mean it's not going to get above it, but look what your reward is. This is your risk. This is your reward. So the question is this a good trade to do? Give you another chance. It's like multiple choice. Choose yes or no, and you get the wrong answer first. You have only one answer left. Right, it's not a good trade to do. So when would a potential time to do the trade, what would happen? What would have to happen? One of two ways things. If the market pulled back near support, correct? Because then you have a lower risk, you're near a support. Or as Kevin mentions, if it breaks out. Now, if it breaks above these highs, what should become support? Yeah, hold resistance. See how easy this is to work once you get a kind of grasp for the education, these little nuances. So that, let me turn it over to Paul for a couple of minutes, and then we'll go over some other markets that I know are really popular, like Tesla and Apple and Microsoft. Okay.
Thank you, Steve. I'm going to take 2 minutes before I hand it right back to you, Steve, so you can do all those other cool markets. We have a promotion going on, and what I'm doing is I am just typing in that link for you right now. If you click on that link I just put into the chat, it'll take you to this page. Notice a few things. One, we are giving you 20% off by using holiday as the coupon code when you go into the library. A lot of people think, oh, we have so many different programs inside of our library. So what we did on this page was put 4 of our most popular programs, and I'll explain these to you very quickly. You can go to that page. You can check it out, all the details, by clicking on these buttons and utilizing coupon code HOLIDAY. You'll be able to take 20% off. But notice it's only good for the next 1 day and 3 hours if you're watching this live. If you're watching it via recording, you'll see on this same page that you're watching the recording on, you'll see the countdown timer and how much time is left. So real quick, our Candlestick Express Class bundle. For those students that want education on candles, we've put together an Express Class bundle. It's all online. You can watch the courses as many times as you'd like. It's going to take you from absolutely no knowledge of candles up to a high intermediate level. You can do this online. We call it the Express Class because it'll get you there quickly. This includes 2 parts, the Express and the Advanced Express. Both will work in any market, any time frame. So that's great for education. Second, our Nissen candle scanning software. This is something that is powerful for those students who have some candle education. It will identify, highlight, and alert and scan for 28 different candle patterns. The same candle patterns that are taught in the Express Class bundle is included inside the Nissen Candle Scanner. Again, clicking on that button will take you to all the information about our software. Third, My Candle Chart. Steve mentioned this a couple of times before, and I will be on, by the way, after Steve's done with all of his other markets to answer other questions. I see a whole bunch of questions coming in. I'll try to answer them quickly. But real quick, My Candle Chart, Steve mentioned this, where we do every day, Monday through Friday, a daily market recap, where our team, Steve and our mentors of Nissen certified trainers, will go over major markets every day, Monday through Friday. We do 2 strategy sessions each week where you can request markets to be analyzed, and we'll analyze them for you. Every day, Monday through Friday, we do a trade setup of the day video of a trade that we're either doing or potentially doing that day. We have a weekly option session teaching option strategies, a weekly Forex session about Forex, and a lot of special topics. So make sure you click on that My Candle Chart membership site where we offer a monthly, an annual, and a lifetime plan. And then finally, our small group coaching. And again, remember, folks, Steve's coming right back on here in about 1 minute to continue doing markets. Small group coaching is literally that. We allow a small group. Work starts this coming Saturday, January 7th. It'll go on for 5 consecutive Saturdays. We limit it so that we can have interaction. You'll actually have access to speak through a mic and interact by talking about trading, different strategies and things along those lines. So yes, you can utilize 20% off of any of those products. However, we have many other products. If you already have these, and we have people in this room I know that have already owned these programs, if you click here where it says click here, it'll take you to the full library that shows you all of our different programs, including these popular items, and you can take 20% off of those. Now, if you're unsure what you should do, you can either click right here where need help choosing your candlestick training. You'll fill out a very quick form. It comes to us and we get back to you with recommendations. Or you can always do a chat by clicking on the chat window that would be available for you to do that. So that is our promotion. I put the link in there. When Steve is done doing his other markets, I will certainly be on to answer questions, and I did see a whole bunch. So Steve, I'm going to hand it back to you. I know people want to see some more markets, so you can take over control. And I'll put that link in again, and then I'll be back on after Steve's done to answer questions. Over to you,
Great,
Steve.
thanks. Thank you, Paul. Okay, so as promised or as threatened, let me give you some other cool markets to watch. So let's look at, nobody's watching Tesla, right? Okay. All right, so Tesla, one of my old jokes was good support at 0. Okay, so Tesla, obviously long-term trend is down, no bottoming signals yet. The only, I don't want to say positive, is less negative. It is trying to build a little bit of base over the last week or so, but obviously very strong bearish momentum. Okay, so this would be my first support area, and just the highs over here is resistance. So when you have resistance tested twice and support tested at least twice, and we did here, it's a box range. Okay, so the bottom end of the box and the top end of the box as a resistance area. And obviously to get our next resistance, assuming the market closes under the lows made the last couple of days. Okay. Now let me expand. There's a weekly chart here. And let me expand it here. Now this is not quite, by the way, this lower shadow, I made it really big here, but to show you, this is not quite a hammer. A hammer should have the lower shadow twice the height of the real body to show a real rejection of lower levels. We don't quite have that. Now this would potentially be a hammer, but there's only 3 days of trading. There's a weekly chart. So if this does turn out to be a hammer this week, that would be at least a little potential turn of a, you know, a little bit more solid support area, but we've yet to see how it's going to do. And so we have to go back. Okay, I'm going to make a monthly. That's what I do. Okay, which doesn't help much. Let's go back to a weekly. And it's just going to be a very compressed candle chart. See if there's anything interesting. Okay, there's a little rising window over here. Now, rising window is a gap and becomes a potential support area. All right. So, but this is going back all the way to 2020. I think the more important area, I like looking at windows when they're more recent. So what I'm going to do is just look at prior. Remember, this is a weekly chart. So it's 1, 2, 3, 4, 5 sessions. So the next potential support area under the lows made over the past couple of days for Tesla are the lows made back in July of 2020, and that brings us to around $91. Okay, let's turn our attention to Apple. Okay, long-term trend is down. Short-term trend is also down. And just look at the prior highs here as a resistance area. Okay. So essentially the highs yesterday and the prior few days. For me to turn even halfway positive on this, the market has to close above this 4-day resistance area above 132. And in that scenario, this older resistance obviously should be support. And here's another classic case where the candles really could have helped you. Make a rectangle or try to make a rectangle. Bearish engulfing pattern. Okay, the first hint of a problem was the doji. Bulls were in charge, really long green real body. In one session, the whole tone of the market had changed. Didn't turn bearish, but turned from up to neutral. This was the coup de grace and extra cautionary confirmation. Dark cloud cover, potential resistance. Within a few bucks, maybe $1 or so, the market got to it and then failed with a bearish engulfing pattern. A real warning. And in that case, my target, this would be a great risk reward. My target would be the bottom of this bullish engulfing pattern, the most recent low. And as expected, at least for a while, this bullish engulfing pattern held as support here and here. Ultimately, it broke below it. But for quite a while, this bearish engulfing pattern was resistance. This bullish engulfing pattern was a support area. If you bought here, if you bought here because the market was at support, there was no bottom reversal signal, but on a risk reward, I think it's a potential good trade. If you bought here because of support, as soon as it closed under here, you're wrong. There's always a price that must say you're wrong, as hard as it is for your ego. So, as soon as it closed under there, you should be out of the trade. Okay, as promised, we'll look at Microsoft, and then we'll wrap it up. I don't want to take too much of your time. I appreciate you giving me your time. There's nothing valuable, and then we'll do the S&P. Okay, so the gap down, a falling window. This whole falling window is potential resistance. And when you have a falling window, the major resistance of the window is the top of the window. So I'm drawing, okay. But let me ask you, based on what we talked about before, while this whole falling window is resistance, with the top of the falling window, potentially the key resistance for the falling window, what else would be resistance before the top of the falling window? Okay, can't give you a better hint than that. Support, support, support. Old support becomes new resistance. So we have, or it has the falling window. This is my first resistance of consequence, and then the top of the falling window. And as to support, a little tricky. I really don't see much support on Microsoft until all the way down here. Okay. You know, because we don't have any support areas before here. So the risk is, you know, another $12 before the support steps in. If it gets above this area, that would be a little bit of a positive. And we will wrap up with the promised. Oh, let me quickly do Bitcoin, which is actually pretty boring, but what's nice about it, it's really very easy to see the trading range. I know a lot of people were looking at Bitcoin, but we could see the recent highs as a resistance area confirmed today with a shooting star right over here. And look at this shooting star. And following that was a bearish engulfing pattern. So the market sold off, shooting star, bearish engulfing pattern, and found support magically at the bullish engulfing pattern. Now see how it got into the bullish engulfing pattern on an intra-session basis, intraday, there's the daily, but didn't close under it. So this is still valid support. But what I do with something like this, I make a support zone from the low of the bullish engulfing pattern here. So here's a market in the box range. It is now at the top end of the box range. Obviously, if it gets above the top end of the box range, close above it, my next target would be the high of the shooting star. If it gets above it, the old resistance should be support if the market was solid. But right now, failed at the top end of the box range. Next support is the bottom end of the box range. And we will finish up with the S&P. Long-term trend is down 20 days under the 40-day, 50-day moving average. But more importantly, here's another box range. Hammer, this looks very similar to the composite. The hammer as support. Okay, notice how the lower shadow is twice the height of the real body. As a support level, got within a couple of ticks of it here. And the recent highs as resistance. So right now, the range over the past couple of weeks is our resistance and support area. And if it does close above this resistance area, my next resistance, I really like these tiny windows because you have, what's nice about a tiny window is you have a really tight support or resistance area. If you remember whatever market we looked at before, there was a big window, so that gives you a big support or resistance area. Small windows are really tight resistance. So this is the trading zone I'm looking at, and I'm going to close above this. This would be my next resistance area. So I know I went a little bit over. Just wanted to give you a sense of the type of education you get and the analysis and kind of get a feel for how important it is not only to understand the candle signals, but how to trade them in market context with risk reward and so forth. So with that, I turn it over to you, Paul.
Thank you, Steve. And I am going to just put that slide back up again. Make sure that you can see it. I had a whole bunch of questions that just came in. I put the link in, and thank you, Steve, for doing that as always. Put the link in again. A couple questions that I got. First was about the Nissen Candle Scanner. So this works on a few different platforms. This button will take you to the version that works on NinjaTrader. So if you have candle knowledge from Steve or from any of our programs, the software is a fantastic tool. Hey, Shirley, good to see you in the room. The software is a fantastic tool for people that have that candle knowledge and want to apply it. If you don't have candle knowledge yet, we encourage you to do so by looking at the Express Class bundle. For those of you that want coaching, that want to be able to have daily guidance, that's what My Candle Charts is all about. That's where we do every day. We update the site with new videos, with new information based on what is going on in current market situations. We do a chart challenge. We do a lot of different things. And by clicking on that My Candle Chart membership site, that blue button right there, you would be able to see everything that's included with becoming a member of My Candle Charts. And then the small group coaching. Some of our students really do very well. And I know we have a couple of our small group coaching students actually here in the room right now that benefit from being in a small group where you get to discuss trading strategies, actual trades that have been made with other people like you. people that have candle knowledge that are looking to improve their skill set. And we all know trading can be a lonely area. You're in front of your computer, and by talking with other people, if you get one idea, one concept, one little something that can make a difference. So what we really did was we put together some of our most popular items. Realize we have many different programs and services available for you. But these are some of our more popular items that tend to be what people are looking for: the education through the Express class, the software that you can apply that education, the membership for that daily ongoing guidance, and then the small group coaching where you can kind of put it all together. We call that one of our signature programs, where it's kind of like the icing on the cake, where you're going to take the education, apply it, talk about it, get feedback on what works and what doesn't work, and then go in and get better at your trading. So I put the link in there. Please note the special 20% off will be done when this countdown timer hits 0. Okay, so if there are any other questions, you could type that in right now. If not, you can always email me, paul@candlecharts.com, or you can fill out the form, or you can do a chat with any of our chat agents. I think I answered all of the questions that were here. I want to thank you so much. Happy New Year, and we look forward to working with you here at candlecharts.com. Thank you.